What if the next 10x move in your portfolio wasn't another flashy AI chip stock, but the invisible platforms powering every major company's sales, data, and workflows in the AI era? While the world obsesses over GPUs, three enterprise software giants, Salesforce, Snowflake, and ServiceNow, are turning AI hype into cold, hard revenue and massive operating leverage right now in 2026. These aren't speculative bets. They're proven compounders, delivering double-digit growth, expanding margins, and dominating the shift to agentic AI. If you're serious about building lasting wealth, you need to understand why these three belong on your watch list today. The enterprise software landscape is undergoing its biggest transformation since the cloud revolution. AI isn't just a feature anymore, it's rewriting how businesses sell, analyze data, and automate operations. Companies are pouring billions into platforms that unify customer data, enable autonomous agents, and turn raw information into intelligent action. This is the rise of the AI control tower for business. Salesforce leads in CRM with Agentforce, Snowflake dominates the AI data cloud, and ServiceNow orchestrates workflows across it, security, and beyond. Together, they sit at the intersection of massive secular tailwinds, digital transformation, data explosion, and agentic AI adoption. Miss this theme, and you risk watching the real winners of the AI economy pass you by. Let's dive into each one with the latest 2026 numbers and why they could deliver strong returns for patient investors. Stock 1. Salesforce, CRM, the AI CRM powerhouse. Imagine a company that didn't just survive the shift to AI, but is accelerating because of it. That's Salesforce. In Q1 FY 2027, ended April 30th, 2026, Salesforce delivered record revenue of $13 billion, up 13% year-over-year, 12% constant currency, including contributions from the Informatica acquisition. Subscription and support revenue hit $10.6 billion, up 14%. GAAP EPS surged to $2.42, up 52%, while non-GAAP EPS reached $3.88, 50%. Operating margins expanded nicely, GAAP to 21.1% and non-GAAP to a record 34.8%. The real excitement is in their AI bets. Agentforce and Data 360, formerly Data Cloud combined, reached $3.4 billion, with Agentforce growing over 200% year-over-year. They've processed trillions of records and built millions of custom AI agents on Slack. Current remaining performance obligation grew 14%, signaling strong visibility. They raised full-year FY 2027 revenue guidance to $45.946, $2 billion, about 11% growth, and continue aggressive capital returns, including a massive $25 billion accelerated share repurchase. Salesforce isn't resting on its CRM laurels. The Informatica deal bolsters their data integration moat, while Agentforce positions them as leaders in autonomous selling and service agents. Risks include integration execution and any macro slowdown in enterprise spending, but with improving margins, strong cash flow, $6.7 billion operating cash in Q1, and a clear AI roadmap, CRM feels like a high-quality compounder trading at a reasonable premium for its growth and ecosystem lock-in. This is a stock for investors who want exposure to the front office of every major business. Stock 2. Snowflake, SNOW, the AI data cloud leader. Transitioning from customer-facing CRM to the foundational data layer that makes AI intelligent brings us to Snowflake. In a world drowning in data, Snowflake's platform is becoming the central nervous system for AI workloads governed, accessible, and consumption-based. For fiscal 2026, product revenue reached $4.47 billion, up 29% year-over-year. Full-year net revenue retention held strong at 125%, with 733 customers now over $1 million in trailing product revenue, up significantly. Non-GAAP operating margin improved to 10.5%, and adjusted free cash flow margins were robust at 25.5%. Q4 F 2026 showed continued momentum with product revenue of $1.23 billion, 30% growth, and ARPO at $9.77 billion, 42% growth. They're investing in AI-native capabilities like Snowflake Intelligence and Cortex, while acquisitions like Observe strengthen observability. For FY 2027, they're guiding product revenue around $5.66 billion, 27% growth, with non-GAAP operating margin targeting 12.5%. Snowflake's beauty lies in its consumption model and multi-cloud flexibility. Customers pay for what they use and can bring their own compute or leverage Snowflakes. As enterprises build AI applications, the demand for clean, governed data explodes. They're winning big with hyperscalers and large enterprises expanding into new workloads. Challenges remain, still gap unprofitable due to heavy investment, competition from Databricks and cloud natives, and variable consumption patterns. Yet, with accelerating ARPO, large customer momentum, and a clear path to higher margins as AI usage scales, Snowflake offers asymmetric upside for investors betting on data as the new oil in the AI economy. It's the pick and shovel play with platform stickiness. Stock 3. ServiceNow. NOW. The AI workflow orchestrator. From data foundations to intelligent action across the enterprise, ServiceNow completes this powerful trio. They're not just another software vendor, they're building the AI control tower that connects it, HR, customer service, and security into autonomous workflows. In Q1 2026, ServiceNow reported total revenue of $3.77 billion, up 22% YoY, with subscription revenue at $671 billion, 22% growth, 19% constant currency. They beat guidance across the board. Current ARPO grew 22.5%, and overall ARPO hit $27.7 billion, 25% growth. Non-GAAP operating margins remain industry-leading, and they're generating strong free cash flow. Now Assist, their AI suite, is seeing explosive adoption. Customers spending over $1 in AXC grew over 130% YoY. Full year 2026 subscription revenue guidance was raised to $15.775 billion, 22.5% growth. They're integrating acquisitions like Armis and Moveworks to broaden their platform. ServiceNow's strength is its workflow automation moat. Once embedded in a company's core processes, it's incredibly sticky, and AI supercharges that with predictive and autonomous capabilities. The company continues to expand margins, targeting 31.5% non-GAAP operating for the year while investing in AI innovation. Risks include execution on new products, competition from Microsoft and Salesforce in overlapping areas, and any slowdown in its budgets. But with consistent 20% growth, best-in-class margins, and a massive total addressable market in enterprise digital transformation, ServiceNow feels like a premium quality stock that can compound for years. It's the backbone for businesses reinventing themselves with AI. Salesforce, Snowflake, and ServiceNow aren't just riding the AI wave. They're building the ships, the navigation systems, and the engines. One dominates customer relationships and agents. One powers the data cloud. And one orchestrates the workflows that turn insights into outcomes. In a market flooded with noise, these three offer real businesses with durable moats, strong financials, and clear AI tailwinds. They're not without risks. Valuation matters, execution is key, and macros can bite, but for long-term investors focused on quality growth, they represent a compelling way to own the enterprise AI infrastructure of tomorrow. Do your own research, size positions wisely, and consider dollar-cost averaging. The AI software winners are separating from the pack right now. Which of these three excites you most? Drop your thoughts below, like and subscribe for more deep dive stock analysis, and I'll see you in the next video. Invest smart, build wealth that lasts.